Silicon Valley Bank has gone bust. It's the 18th largest bank in the US and it's gone bust. And not only that, Silvergate has also gone bust, which was a bank that was doing all kinds of stuff relating to crypto and FTX. And yeah, it's just kind of crazy what has happened this week. I didn't plan on doing this live stream, but things have just been insane this week. First thing I just want to quickly go over, the Canadian dollar has had its worst week since back here in September of last year. I've literally just pasted this over. This is the worst week it's had since September last year. Just think of where the stock market was then. So that's kind of interesting. And it hasn't been a strong week for the US dollar either. So kind of crazy. And what's interesting about the Canadian dollar that I just wanted to say, the COT data came out about it, saying that 95% of retail traders are shorting the Canadian dollar. So I think we're due a bounce because, as we know from UK brokerage data, most retail traders lose. So anyways, let's get into this about what is going on with Silicon Valley Bank. Banking regulators shutter SVB, collapse, unnerves investors. The regulator appointed the FDIC as receiver, putting the tech-heavy lender into receivership and will dispose of its assets, according to the statement. The main offices and all branches of Silicon Valley Bank will reopen on March 13th, and all insured depositors will have access to their insured deposits no later than Monday morning, according to the FDIC. Think about that. If you just use that bank, you have zero access to your money until Monday. I mean, what happens if you've got bills to pay or whatever? So you really have to think about that. This is the 18th largest bank in the US. So it is not a small bank, and it's one of the biggest financial collapses of a bank since 2008. So it's kind of unbelievable when you really think about it. And the FDIC, note how they say insured deposits, because there will be a lot of uninsured deposits that are gone. People have lost it. It's completely gone. And even though these insurance programs aren't great, they really aren't great because they're backed by a money printer, essentially. It's the same with CDIC in the US. In Canada as well. So it's just backed by money printing. So you really got to know if your deposits are insured or not, because if something does happen to one of the banks, even in Canada, I know everyone thinks they're great. Not on this channel, I know that much. But make sure your deposits are at least insured, and make sure you spread them out between financial institutions, or you'll end up like this. This bank is heavily exposed as well, likely going to go bust as well, First Republic Bank. And there's a number of other banks that are actually also possibly linked to this bank as well, as the contagion spreads throughout the financial system. And really what this means for the Fed next week, who knows? But it could weigh on their decision, or maybe it's not. Maybe it'll be a surprise. But one thing I wanted to show you that's really interesting, because you know, you can think about this with the Bank of Canada as well, or even the Bank of England when it comes to raising interest rates, is the lag effect. So basically, this guy Will put up this chart, and I thought it was amazing on Twitter. That's why I put it here. And it just kind of visually shows you where we are right now. And I think this is actually too far in advance. I think we're probably around like 1%, 1.5%, something like that is what the economy is feeling right now. And just think about that. We're having banks go bust whilst we're at 1.5% interest rates. I just don't think people really understand what's going on. And the other thing that is really interesting when you look at this chart and really think about it is you're not really going to catch up until 2024 to where the Fed funds rate is right now, or where the Bank of Canada's interest rate is right now. You're talking the end of 2024. That's when all those interest rate hikes will catch up to the economy. So think about that, because it's incredibly important to think this way, because even when they start cutting rates, which they probably will at some point towards the end of the year, because unemployment will be spiking by then, they'll be under pressure from politicians. And really, who knows where inflation is going to be? It depends on how bad this downturn gets, and it depends on a variety of different factors. It's very hard to forecast, obviously, that far in advance. But you have to think about that, because even if they start cutting, again, you're looking at like 18 months until that really impacts the economy, 12 to 18 months from that date. So, you know, it's going to be the lagging effect of these interest rate hikes are going to be impacting the economy for a long time. And that's what I don't think people really understand is, you know, even if they start cutting rates like they're holding rates right now in Canada, it's going to have a huge impact on the economy. And then one thing I wanted to show you, which is about the banks and where we're at right now, what countries are the most exposed. And I'd really, you know, you can go and look over this on your own time. I put a link in the description, but you can see that Canada, for some reason, when I resize this chart, it just goes so small now. So I don't know if you can see that. But Canada is one of the worst offenders on there. The Netherlands, Sweden, Denmark, Russia, Cyprus, South Korea, Ireland, Singapore, Iceland. They're all on this list, which Oxford Economics put together of countries that could have a banking crisis. And when you look at private debt levels and you look at household debt levels, oh look, they all appear on these lists. You got, I don't know why Austria is highlighted, and I'm not sure. Whoa, it just completely froze me out of that. I'm not sure what went on with that one. But if you look at household debt to GDP, South Korea, Canada, the Netherlands, Sweden, Denmark, those are all appearing also in this article as well. And they're right there at the top where when it comes to household debt to GDP. The risk factors, and they were also there for private debt to GDP, but the chart messed up on me there. I don't know what happened. And another thing that I want to show you real quick is the VIX. It seems like it's broken out. We'll see next week whether this was just a spike. But when you look at it, we're all the way back up to nearly 25, which we haven't seen since the end of last year when the market was selling off really hard. So it's going to be really interesting to see what happened. Also, bond yields have absolutely collapsed today. I mean, bond yields just down across the board. Intense amount of debt buying. Again, I think this is stupid because they don't even know where inflation is going to go at this point, and the amount of debt buying. I think it's just kind of the fact that this has been the case for so long. It's almost like just the response that market forces have is when a crisis happens, just buy debt, buy lots of debt, everything's going to be okay. And it's not going to be the case for the future, especially if inflation remains high and we don't really know the outcome of that. I mean, in places like Canada, it's going to be really, really interesting because if you've got a weakening currency and most of the consumer goods that people buy are imported, then that's going to impact your consumer price inflation for sure. So it's going to be really interesting to see what happens. So, you know, banking crises, they're happening. They're happening. We've seen this bank go bust in the US, and it's not the first either this year. So there really is risk in the system that is starting to heat up. And once those rate hikes really start to impact the system even more because of that lag effect, what is really going to happen? It's going to be really interesting to see, and I don't think it's going to be good. And I hope you got the takeaway from this, that is to keep your money in as many different banks as possible. Make sure your money is insured at least. Make sure you've got insurance on the insurance, because the insurance is just backed up by a money printer, and then that's all you can do, really. So anyway, if you've enjoyed this video, you might like that video there. You might also like that video there. Thank you so much for watching. Have a phenomenal weekend, and I will see you next week. Thank you.